Hey everybody, Courtney Smith here with our July the 12th Wall Street winners. Let's dive right in. Boy, this is the deep end of the pool we're diving into already. Okay, so we had our little dip. The market had a little tantrum, but now we're back into bull market mode. We just made a new all-time high on Friday. Purple predictor looks pretty good. The only thing that's a little bit negative on this chart is the fact that we made a new all-time high, but the little green line there, down about an inch below the price, that's the RSI, and it didn't make a new high. So that says that we're going to stumble for a couple of days. We can still end up the week higher, but we're going to stumble a little bit because that momentum divergence usually means a little, 1, 2, 3 day correction. Dow Jones also didn't quite make new all-time highs, but made 2-month highs, and we're very close to all-time highs again. Now, in the upper right-hand corner, what we can see is that the red and green lines show selling pressure and buying pressure, and they're equal. They're pretty equal. And then that black line is ADX, and what it's saying is that we're in a neutral market. We're not in a bull market in the Dow. I can look at the chart and I can say that makes perfect sense to me. Also, a little momentum divergence on that light green line there as well. So look for another little dip there. NASDAQ did different situation. So it really only had a 1-day dip, and then we took right back up and made a new all-time high close. We didn't make a new all-time high, but we made a new all-time high close. And purple predictor on all three of these big indexes are pretty darn good. So seasonality, let's just stop for a second. So seasonality, we're currently in a neutral period. And as you can see, we use the IWM, that's the Russell 2000, for our seasonality indicator, and it's showing clearly a neutral market. So the signal, the seasonality is working beautifully here. Now the Utes are supposed to be bullish, and they perked up a little bit in the last week, but still nothing going on. And I'm not going to call it bullish until it breaks the red line on top, okay? If it breaks that red line up on the top, I'll come in heavy on the Utes. But the other thing to remember is we're kind of getting towards the end of the bullish period for utilities. They usually end their seasonality at the end of September, in September. So we don't have too much time, a month or two, let's call it 2 months before the seasonality runs out of gas for utilities. So far, not that great. Purple predictor is suggesting that we're going to continue to move higher, but it's a long way to that red line, and it could peter out before it even gets up there. Now, StockTradersalmanac.com, they do a tremendous job, and you can see that it doesn't matter which you're looking at, but we're focusing on the red and purple lines. It's bullish. So yes, we could see a little stumble because of the momentum divergence, but we're in a 2-week period that's very bullish. So look for this market to continue to make new highs. Asset allocation showed a little bit of support here, but generally speaking, money's not going back and forth between the bond and stock market. So people they're just kind of sitting on their hands and saying, okay, I like my asset allocation the way it is now, and so I'm not going to move any money from bonds to stocks or stocks to bonds. But they are starting to take more risk. When people are feeling conservative or scared, they go into bonds. We see that no money's going into bonds. When we look at stocks, if they're nervous, they go into consumer durables. They go into food. They go into things that people have to buy even if there's a recession. But when they're feeling frisky and when they're feeling that they're going to see higher prices, they want to take on more risk. They want to get into technology stocks. They want to get into consumer discretionary stocks. And here we can see that the market's getting friskier, and that's bullish for the stock market. Oops, what am I doing? I went the wrong way. Global shares are really lagging behind the American shares. Why? Because the economy just is not that great. Every day I'm thinking of going up to Europe here, and it's starting to open up, and then they'll do something like the UK will open up and then they'll shut back down again. So we're not seeing that so much across all of Europe, but boy, they're still on the edge. Let's put it that way. They could shut down at a moment's notice. So I'm definitely going up in September, but I was thinking of going up earlier, but we'll see. Anyway, the point being is that the economy is not doing that well. The yield curve, I want to stop here. Yield curve is very big at extremes, and we're not at an extreme right now. In fact, we're kind of tepid here. The yield curve's at 1.3, which is simply taking the 3-month minus the 10-year, and that gives us 1.3%. But you can see that the direction is heading down. So what's happening is that short-term interest rates, of course, are not moving at all. But long-term interest rates are moving, and they're moving lower. So what this is doing is it's slowly changing the economics of the economy. And what they're saying is, the economy is going to suck for a long time. That's what this chart is telling us. Now, and therefore inflation's coming down, and therefore 10-year note yields can come down. But and what they're saying is the reflation trade is over. So it's starting to tell us it's moved enough. It's starting to accelerate to the downside. This would be 10-year Treasury yields are coming down. Obviously, short-term interest rates are going nowhere. So this is it's not bearish for the stock market, but it's kind of getting there, because if inflation's coming down because the economy is coming down, then that means that earnings are going to be coming down. We've got to watch that one closely. So this is the flip side. This shows the strong bull market that we've had here over the last month in Treasury notes. I can't get excited about this because I don't think that the fundamentals are justifying it. But the purple predictor is doing great. So I may have missed a nice trade, but okay, I didn't lose any money. But nonetheless, it's showing good price action here. But when I look at my indicators, gold is coming down. That's definitely says that we're going to have lower yields. And notice that the blue line here, 10-year treasuries, it's now making lower lows and lower highs. It's in a bear market. So that suggests lower interest rates. But the CRB is not. So our key indicators are suggesting lower interest rates for the 10-year treasuries. I'm going to have to ponder this. Okay, now if we have lower interest rates in the U.S., then the dollar should be getting weaker, and it is getting weaker. I look at this and I say, but the market's been pretty strong. I mean, if I go back here, we see that interest rates have been going down and bonds have been going up because they're inverse since really May. Now let's go back to that chart. So they were both going up, but now they're starting to go down together. Very interesting. And gold is struggling to move higher, which tells me once again, I don't want to be long. Why do I want to be in a tepid bull market? I don't want to be in a tepid bull market. So let's take a look at our key indicators. Mildly bearish, flat to mildly bullish. This one's turning nicely bullish. But I think 111, like tepid, right? Tepid. It's not time to buy gold yet. Maybe later. Crude oil is bouncing back after we saw a big fight developing between the United Arab Emirates, where I'm sitting right now. And in fact, I'm 2 blocks from Mall of the Emirates, okay, which is a gigantic mall where you can go skiing on the inside of the mall. Anyway, what we're seeing here is, but they're fighting, and they were arguing over how much to raise production, but the UAE threw a wrench into the works, and as a result, they're not going to be raising the amount of production, and the Americans are not coming in at all. So I think we're going to head right back up to, let's call it up around $80. Bitcoin boring. The purple predictor had been looking good. Now it's looking stable. I think all in all, we kind of have to look at this as a bear market, as a descending triangle formation. We certainly broke the lower lows here. It's the world's weakest bear market. but I think the place to be, I don't have a position in it myself, but I think the place to be is to be short Bitcoin. All right, freebies, you know we love having you here. And once again, I'll just go briefly through it. You got to go watch this webinar here. I lay out the outlook for oil till the end of the year. The scenario is working out perfectly. Go to YouTube/Courtney Smith Trading. I also put together another one called Biden Boom Bust. We're in the boom phase right now. And once again, you can watch that on YouTube. And then if you subscribe to Wall Street Winners, which of course you should, I'm going to give you the Biden Boom Bust special report where I lay out several stocks that I think will make money in the Biden boom. We've already bought one of those stocks. We still got 3 more to go. And then I'm also going to give you an oil special report on 5 stocks that I think are going to outperform the market because of oil.